What's up, hackers? Welcome to another episode of Hack Crypto. If you guys are brand new here, we hack all of our Web3 education. If you are brand new, my name is Steve. I'm the host here at Hack Crypto. I've been in crypto for over 10 years now. January 2013 was when I first got involved. So this will be my fourth bull run, and it has been a wild ride. I was in it from 2013 to 2014, 2017 to 2018, and most recently, the 2021 craziness. So this time around, things are different. Institutions are here. ETFs are getting approved from BlackRock. It is just a crazy, crazy time to be in the space. And if you guys are brand new to the space, welcome. This is going to be a beginner guide to how to maximize your profits and keep yourself sane during a bull market. There's a lot of FUD, which is fear, uncertainty, and doubt out there, and there is a ton of misinformation and just crazy grifters and scammers everywhere. It's basically like operating a minefield, and if you're not educated, you can have a blindfold on, but if you are educated, you can not have that blindfold on, and you can operate very coolly and collectedly. So in this episode, I'm going to break down 5 simple ways that you can very much take a calculated approach to this crypto bull market. And if you guys want some simple basic tips, stick around to the end because there is a bonus. I'll talk about the high level and then talk about a couple of examples as to what you should look out for and what you should avoid. As somebody who's been scammed, SIM swapped, hacked all different ways over the last 10 years, I've seen a ton of projects explode, getting to over $1 billion in market cap. And there's just a lot of chaos that happens in this space, and rightfully so. It's a brand new industry. Young people come into the space. They see the world through a lens that they need to change it, and there's time for revolution, and things break, things happen, and scammers come in and try to take advantage. All of these things can be true at the same time. And what's the first one is Shilling. Shilling is where people are going on social media, particularly X/Twitter, and they are talking about cryptos that they are invested in. They have an interest in telling you about this crypto, why it is the best. And the best example I can give for you here is imagine a room full of 10 people. All 10 people have a different seashell. They're all different designs, but they're all a seashell. All of a sudden, each of those 10 people throw thousands, if not millions of those shells into the middle of the room. A new person walks in without a seashell. They see this huge pile of all these seashells that they can grab from. Every single one of those 10 people in that room, they want to convince you why what you're looking at, which is the same seashell that they're holding behind their back, why that one is the best and why all the others are the worst. That actor is telling you that that is the best one because they hold a bag of those shells behind their back. They want you to purchase, using your hard-earned money, that seashell or a huge bucket of those seashells to hold a bag, and they want the next person to do it, and they want the next person that walks in through that door to do it. Everyone in that room is incentivized to tell that newcomer to purchase that set of seashells that matches the one behind their back in their bag. A disconnect in this space is that people aren't transparent with what they hold. They aren't transparent if they've been paid to say certain things about those seashells in the middle of that room. If they've been paid in the seashells that they hold behind their back, many don't disclose that, and that is an issue. However, this exists in traditional finance as well. Financial advisors, when they tell you about financial instruments, the vast majority of their time, they are going to be telling you that those products that are the best are the ones that they rip the highest commissions off of. This is a fact. This has been studied. This has been a big issue for many, many years now. Financial advisors say their fiduciary duty is to the people they advise, but ultimately money talks and BS walks in many cases in traditional finance. And this is an example where traditional financiers have these huge lists of instruments where you need to move that money to make the biggest yield, but ultimately they're going to be ripping these huge commissions on the back end. They have relationships with those people in the back end. And many times they do not hold a bag behind their back of seashells and telling you to get into the seashell instrument in front of you, but they have relationships with a middleman that sits there between you. So the crazy part here in this analogy is when you walk into that room full of those seashells, it's just you and those shells. You have to determine what is best for you. In traditional finance, there are all these people sitting in that room that rip commissions off of instruments, but there are middlemen sitting between you, them, and those seashells. So that's the big key difference here. You can step right into crypto and grab however much you want of each of those seashells, but in traditional finance, it's different. You're walking through multiple gatekeepers to get to those different seashells. Big difference, but it is the only analogy I could really think of to describe why Shilling in this space is artificial. It's very difficult to sift through who is telling you what, but the best rule of thumb here is everyone can't be trusted when it comes to telling you to purchase something that is not a Bitcoin or Ethereum or, a top 10 market cap coin. In my opinion, most people just say Bitcoin and Ethereum is all you need. And a couple of years ago, that was all I was into. But ultimately, there are a lot of cool technologies going on out there. How things can go wrong. What's really important when you look at scams and all of these people shilling and all of these meme tokens that are popping up all over the place is you need to understand how this can go wrong. Before you actually step into the arena, you need to understand what the actual damage that can be done is. And one of the key ones in the terms that go around on crypto Twitter is rug pull. What does that mean? Rug pull traditionally means that a token is created and people jump into it because there's incredible marketing. A lot of influencers get behind it because, like the analogy I initially said, they have a bag of those seashells behind there and they are talking about how those seashells are the best out of the whole pile of seashells. It is the best one. You need to get involved. You need to get in early. You need to get whitelisted so you can get access to it early before everybody else. All the other people that are going to come behind you through that room door to get those seashells, you need to get in now. And they're going to be telling you to do that as aggressively as humanly possible because that pumps the price, gets it, very high. And the rug term is referring to liquidity being pulled out. This is for a whole nother video. There's plenty of videos on here on Hack Crypto where you guys can see what liquidity is. It's referring to a pool that people put into to allow for decentralized finance to happen, for people to swap without a middleman. And what happens, people can remove that and then there's no way to sell that back. So in the analogy of the seashells, imagine you buy a huge amount of a bag because you see somebody that really convinces you in the room that also has a bag and you say, yeah, I think I can get along with this mission. This sounds fantastic. You hold on to that bag of seashells and then all of a sudden somebody comes in and the instrument that was created that allowed you to swap that seashell for other seashells like US dollars, for example, that gets removed. So there's no ability to get that conversion done. There's no ability to sell. That is what a rug pull is. It's important to know that. It's important to know what can go wrong. In addition to losing funds, getting hacked by syncing a MetaMask wallet to a phishing website where they can drain your account is another very popular way that happens to a lot of people in the space. Next up, don't trade. Now on crypto Twitter, you're gonna see screenshots. And a quick story for you, back in 2017, end of 2017, early 2018, I followed a lot of traders on Twitter. I had a lot of friends, still have a lot of friends that are active day traders. And that is the number one group of people that get wrecked the most in this space. Sid, a trader, I knew him. I saw what he was posting. I'm not going to mention who it was. And then it came out that he'd photoshopped a bunch of gains and a bunch of these images that he was sharing on social media. And I was really thrown off by it. I was like, why on earth would somebody Photoshop this image to say that they had a bunch of gains? They'd already made insane gains, 50%, 100%. And that was when a light bulb moment happened for me, when I realized that the reason that traders are posting and saying, I was right, check this out, I was right, check this out, I was right, I did this right call, I'm right all the time, you need to follow me, is because we live in an attention-based economy. When people are posting things that show, that buy them credibility, it shows credibility, they're going to gain more followers and in turn, more long-term value for them as social capital to the world and to the industry. And what happens when they're consistently posting all of these screenshots of high leverage trades, people follow them and they begin to believe that they can do it. It's a dream. It's selling a dream, and that is wrong. It's incorrect, and the probability of succeeding at it isn't worth chasing. For people that are watching this as beginners, ignore it. Ignore the traders. That's my number one piece here on trading. The people who succeed are the hodlers, the people who hold on for dear life. They hold their crypto forever. They try and hold as long as they can. And the builders, the entrepreneurs and the founders are the people that gain the most success in this space. So hodlers and founders are the ones who succeed the most. The people who get wrecked the most are traders. People who think that they can outsmart an extremely volatile, high risk on asset are the ones who continuously get wrecked. Buy whatever you can afford to lose and sit on it. Just hold. Dollar cost average over time, buy a little bit amount over time. And just like a savings account or an investment account of any type, you buy a little bit over a long period of time. There's a famous saying on Wall Street when it comes to this third tip, and it isn't about timing the market, it is time in the market. That is what matters. That is what you need to take away from this, is ignore the people that are trying to buy credibility by saying that they're right all the time, because they're not. Number 4, Don't trust, verify. This is an old saying in the crypto space. That is because there are scams everywhere. Grifters come in every single cycle. They're going to make all sorts of crazy money and they're going to post it everywhere. Most of the time they're referring to an illiquid coin that they've created and they purchased themselves, or a bunch of friends are purchasing from each other. And they're just showing huge screenshot numbers because the US dollar value of it is in reference to an illiquid token that has a price associated with it that they've created or manufactured. So don't trust, verify. The benefit of the blockchain is you can see everything on a publicly available ledger. And this is one of the unique, innovative pieces of technology of the blockchain, is that you can see everything. It's transparent, it's open source, you can see it all. So always verify things are happening on chain. And another thing that you can do with centralized exchanges, I don't always recommend doing centralized exchanges, but if you are a beginner, use Coinbase, use Gemini, use these larger exchanges that are easy to use. You can sync a bank account with them. They're regulated in the US, and you can go on and learn about these assets in an easy to use way. Once you get comfortable, pull that money right off of that exchange into a Ledger or Trezor cold storage wallet, and then you're in full control. That's what I've been saying on this channel for many, many years now, but ultimately there's going to be scams everywhere. There's going to be people that want you to send them the Bitcoin and the Ethereum that you've worked hard to get. Going around on the web with your MetaMask wallet when you're comfortable and you've pulled it off, you can confirm that you're not connected to certain sites, and you can do it easily on MetaMask and disconnect from sites and verify everything, URLs, everything. And this is the number one reason that people get hacked, is they don't verify different domains when they're clicking on them. Scammers are extremely creative with DMs on all social media platforms. Never send anybody any money on DMs. Never send anybody any money on social media. Simple. Just ignore it. Totally ignore it. And don't click on anything that you don't trust. If your browser says don't trust it, don't trust it. It's very straightforward. It can get lost in translation though, when things are crazy and people are euphoric. Lastly, with those centralized exchanges, there are actual links that I'll put below to the one for Gemini, but you can see the funds that they have on hand. There was an initiative after FTX, one of the largest exchanges, exploded from fraud by Sam Bankman-Fried last year, where all the exchanges put out a real-time updated ledger balance. So it says what they have in their treasury. So you know, all right, Gemini has, 300 million worth of Bitcoin, 100 million worth of Ethereum, whatever. They go through all their line items so that people can trust, they can verify that Gemini or Coinbase, they have these funds available. Coinbase is a public company, so you can see their financials and everything on, public documents. But ultimately, these are a layer of trust. Like, you have to trust a centralized exchange for a period of time, and ultimately get your funds off there. Keep it all on cold storage. And that is your self-custody and that sovereignty that I've talked about many times on the channel before. Don't trust, verify. Lastly, but most certainly the most important, this is a bonus for everybody that stuck through this video. This is an old trading concept, which is have an exit plan and get in position. Getting in position is something that I didn't understand in the 2013, 2014 bull and the 2017 bull. I was sitting there trying to outsmart everything. I thought it was really smart to get into really high risk altcoins, and then boom, liquidity's gone and you're left with that bag of seashells behind your back that nobody wants. Everybody wants Bitcoin. Everybody wants Ethereum. And what is really important mentally is to get into a position and sit there, hold it. Get a number that you have in mind, back into, let's say, $1 million you want to make, back into what that would need to happen. What would need to happen in order for what you're holding right now to hit $1 million? And then get more aggressive, where you're dollar cost averaging it and say, like, okay, I need to do a 10x to get to $1 million, or 20x to get to $1 million, or a 30x to get to $1 million. And then eventually you can work through it in your head to say, like, okay, this number keeps going up. I only need a 5x to get to $1 million. But each step of the way, you need to have a sell plan. You need to know, all right, is it realistic or possible to get to this point? And if you've doubled your money, that's insane. You need to have a sell point. Sell 10%, sell 15%, sell 20%, whatever it is. Double, triple, quadruple, 5x, 10x. These numbers are insane to regular traders, and people in this space they're not traders. People aren't professional investors. They're people that see a revolution happening and they're front running the biggest institutions in the world, and they lose track. They think that things can always go up, but I'm here to tell you that they can't. It's $1,000 or $10,000 or $100,000, whatever it is. Sit on it and then sell as it goes up. You will not regret it. Your family will be happier with it. Your life will be at peace, and just ignore long price explosions, because you can get back in. You can get back into the market when you want. A great resource here is Bob Lucas on YouTube. The guy's a legend, legendary trader, and he talks about being in position mentally so you're not checking the price as an indicator. So if you're checking every day what's going on, when I was in 2017, I was doing that every day. And now with a kid and a family, I do not. I purposely got into position last year and some this year, and I just plan on waiting until next year to really check in heavily and see what's going on. And I have my sell plan. I know what I need to do. I know what I'm gonna do, and stick to that regardless of what happens. And that's it. HODL, sit tight, enjoy the ride, ignore a lot of the shills on Twitter. Don't get scammed by DMs and impersonators. Always verify everything that's going on. Do not day trade. Do not trade frequently. You're gonna get wrecked if you do that. I can guarantee you of that. The probability is against you. The market is insane. Just buy some, hold some, and just sit and chill. That is it for this episode. I hope this guide helped you as a beginner. There's nothing to fear. Just go after it. Have some fun, make some memes, enjoy making friends in this space, and ultimately you can make life-changing money. So sit still, hold a stack, and have a sell plan. And be safe out there. Stay mentally aware of what's going on. Try to enjoy life. There is life outside of people telling you not to sell and buy a bunch of things. There's life outside of investing. And go outside, touch some grass, look at the sun, and try to enjoy life. And that's it for this episode. If you guys like it, slap subscribed with notification on, and I will see you here on the next episode of Hack Crypto.